Forex Legacy Academy.
Market breakdown on URUSD.
Welcome, traders, in the Forex Legacy. You are tuning in now to our channel, Forex Legacy Academy, and this is your mentor coach, Master P, who is the founder of this channel, Forex Legacy Academy. This morning, I want to do a breakdown with you on one of the pairs to show you how you can use the signature trade to trade, and how you can be able to identify when the market is in a reversal or starting a reversal, and how it will reverse, and how also it will trap the traders in that price. So without a waste of time, please remember to, if you are new to this channel, please subscribe to our YouTube channel at Forex Legacy Academy. 6 steps you can follow to trade the signature trade. So let us go to the market, and then I will show you how you can apply this strategy. Just want to share with you, I've already you can see in the Euro, USD, and I've already done my pre-analysis on this pair. I don't normally trade this. I think for education purpose, I wanted to use it as an example. And then once you have grasped the strategy, for me, on LGBT, on LGBT, yeah. Okay, let's dive in our analysis. Let's go back to our okay, so firstly, when you trade the signature trade, you need to first be able to identify what we call the induction trend. So what do we mean by induction trend? Let's go back to our let me just zoom in so that you can see I'm in the 1 hour time frame. If I can just zoom out, I just want to show on our way for this red line. So I have identified this is a trend line that I've used to identify the major overall trend. Downward trend. So this downward trend is now the induction trend. The trend. This zone where, if I zoom out, you will see that it started to consolidate in the zone here. Now, price normally consolidate. What happens is that both of from the trend because it's just in a range. And normally there will be traders who are selling from this point here, and then there will be traders who are buying from this point here. So firstly, the first step is that you identify the trend. So the induction trend, the trend that is now being induced so that traders can follow in this trend is this downward trend. And if you go also, you can go into your bigger time frame, like your 4, 5 month downtrend. So once you have identified the trend, go back to my time zone 1 hour. Is that now that to look in that trend to see if is there any trend that you see that is being formed, and what do I mean by this? I just want to also use this data that I have here, a trading view. It's called the entry point 100. You can also check it, and it gives signals in terms of where to sell or buy. And if you can look in this, you will see that this has given now for the past days a sell entry. This was the first one here, and then this is in the one now. You see this here. If I zoom out this zone, you can already see it's giving a sell. So my assumption is that there are also other blocks that are here of sells, because what is happening here? A retail trader would see this as what because I see the price every time when it came to this level, the bounce back, came back, bounce back, so the column 1, 2, 3, 4, 5, or maybe 10 on that. So many traders, when they look at this, they take it and that they so what I want to teach to you that there is a different road is also used. It can be a resistance on all also can be used as a threat to serve as the retail trader. Now in the Forex Legacy Academy, we don't normally speak about the resistance or support zone, but for the sake of the education, the training, I want to use that you can understand what I mean when I refer to this zone. Normally, I call them liquidity zones. Like for example, this yellow triangle represents my liquidity zone. So the first step, you identify the trend, induction trend is downward, and then you look at the trend. So here, as I've said, that the trap is sellers are being trapped. So, and then what happens when a trap is formed? You will also that when sellers are selling, it means that above their sell entry, they will have their what we call stop uh, stop level, or and then what happens in those stop levels is that liquidity is being placed. So now when you trade the signature trade, we normally look for the trap to can identify the next move where the market will want to go, because the market is interested, the market makers, the big banks, they're interested in their liquidity. For them to move their liquidity, they need, say for example, if they want to place a 100,000 US dollar order, they will need 100,000 US dollar sellers coming in the market, so that they will be able to contain the liquidity and move the price. So let's go back to our whiteboard to look at the other steps. Just move up because of opening the close. Okay. So you identify the induction trend, and then we said it is a downward uh, a downward trend. Downward trend is forming. So this is what now is happening. So that is the trend that we have identified. And then we spoke about the to identify also the trap in the market. And I've shown you there that what is, let me just see if I can just get some time. Okay, just use this. So the current price market that we have is that now there is this, there was that range that I showed you, just like this. And then I explained to you that what is happening in this range is that we've got sellers who are selling and buyers who are buying. But if you look on that example I've showed you, is that there is more now sellers who are coming in because they are selling at this point because they have seen that the overall trend is a downward trend. So once you have identified the trend, we plot the wedge. How do we plot the wedge? The wedge is plot from your low of price to the high of price. Let me try to get a different color. Let me get pink. So how do we plot a wedge? You will go back to your previous low of price, and then you will draw a wedge, and then to also your high of the previous day. So this is how you would draw a wedge. Basically, a wedge is, let me just erase this. Let me just, so, get off this. Example. Oh no, let me just undo that, and then okay, we'll go to our, I'll go to let's go back to our trading view. Okay, I'll show you in basic in our example in the trading view. Okay, so if you look carefully, I've plotted the wedge from the previous low of this price to the highest point. So this was I think on Thursday, and then Friday. What happened is that price broke out of the wedge and it created what we call a W formation. The W formation is formed when price does this W in the lower of price, and this is how we can see a W formation. So we can identify once after a wedge is plotted, this will be the first leg of the W, and then this is the second leg. So now we normally, once we see this being formed, we don't trade the breakout, but we wait for the breakout of this wedge, and then we will take a buy from this. So with this example, I wanted to show you when I started analyzing this was on a Friday. Today it's Monday. This is Monday. So just before the London Open. So you can see now what is happening. It's before the London will open. Now there are more sellers pushing the price down. And my prediction is that when the London Open, price will either maybe come back to this level that I have identified as a buyer zone, or maybe on this white line. So between this area is where you can buy this price. Because and then but when I started to analyze, I gave a signal here on this first green line. This was your first entry on the price with this as your stop loss level 0.8 460. Calculate for this first TP is for about 61 points, and then two different point 100 points. So that's normally what I would aim to can get from the market, because I'm normally a great trader. If I see that yes, I have not reached my target, I will let trade go maybe for the next day until I will be able to reach my target. But normally I go for 100 pips, and with Euro USD sometimes it can give you less than that. That's why I prefer to trade the GBP USD or the GBP yen, because they can move about 100 to 30, 100 to 50 in a day. But this is my analysis on this, and also to show you how you can trade the signature trade. Traders, I hope you have learned, and please, if there is anything that still confuses you that you want to ask about what I've shared in this video, please, I will wait for your comment in the comment section, and please remember to subscribe to our channel, the Forex Legacy Academy. This will help us a lot, that we may continue to offer this knowledge, education to anyone who is in need of uh, this education to start their uh, Forex journey, Forex business journey, or that they are wanting to learn a strategy that will help them to can be profitable. And I also want to give a shout out to this academy called They are also on YouTube. You check out their videos. This is the channel, the academy, that taught me to learn about this uh, universal price action strategy of trading the reversals and how to can identify reversals in the market that will help you to have better entries and also to also identify the threat in the market. I think it helped me a lot to understand this. Able to identify when the market is creating a trend and I'm able to stay away from or move with the big banks or the market makers because what they do is that they will reverse the direction of the trend against you to take your liquidity. Thank you for joining us in this video and please subscribe to our channel if you haven't not, and for our subscribers, thank you for supporting our channel. I will see you in the next video. Thank you.